Good morning, everyone. Welcome to the Midweek Market Meetup. I hope you're all doing well. We'll kickstart by having a look at the calendar today. Just going to share my screen. Right, you guys should be able to see the calendar there now. So we've got news today at 2 p.m. The FOMC meeting minutes. That's not something that I'm overly concerned about for the AM session. I'll just be trading my usual process, just waiting for 9:30 open for indices, 9 AM for commodities. Morning, Ash. How you doing? Morning, Jolly. And then we do have, I don't know if you guys are aware, if you're on Forex Factory and just hover over the title up here on the left, you can just drop down to energy and it'll take you over to the energy news. So we've got US crude oil inventories today at 10:30. So that's something that I'd be keeping in mind. If I was looking for a trade on oil, then I probably wouldn't look to execute that until after 10:30. All right, we'll jump over to the charts. I wanted to just have a look at a CL trade, a long from yesterday morning. I just wanted to run through the logic behind that. I don't know if any of you jumped on that trade, but I just wanted to run through some logic so you guys can get an understanding of that trade. Just change screens. Morning, MIF. Morning, JXKRN. I don't know if there's a way to pronounce that. Okay, so here we are on oil. So coming into the market yesterday, if we zoom in a bit here, oil was located at this bullish FEG. It is tiny, but it was located there. And price was reacting to that level. So for me, I decided to take a bullish bias for the day. So with that in mind, I dropped down to the hourly. And here's that daily FEG. So looking at the hourly, I liked that we essentially got a sweep here, creating high resistance liquidity. Liquidity resting in this gap here quite a lot, plus some low resistance at these highs here. Some might look at this as a change in the state of delivery, this level here. So that would be a bullish change in the state of delivery. So we're starting to build some logic and narrative around why we might look to take a long position. As we came into New York Open, price came down into our hourly point of interest here, which was our bullish FEG on the hourly. And then if we drop down to the 5-minute, can see that price pushed down. This was 9 o'clock. It pushed down into the point of interest and started to make its way higher. Therefore, this would be our breaker. Now, it tried to get through the breaker once and it failed, but it did have another go and it managed to do that with displacement. Willie, how are you, mate? Yes, I only trade unicorn. It's the only entry function you ever need. So this is our setup here now. We've got our breaker plus FVG. We get displacement and a clear close above the breaker. Then I'm looking, as soon as this 9.25 candle closed, that was when I placed my limit orders. Now, if you had a tight stop to the breaker, then price reached 2R. This was one of those times where you wanted to have a tighter stop. If you opened it up too much, then you wouldn't have reached 2R, but it's also one of those times where if your take profit was here, then you would actually look at that and go, okay, we're close enough. Let's take the money off the table. We don't want to give it back. The reason I'm pointing this out is because obviously at the end of the day, price moved lower. But what we're looking for when we look at bias is we're looking to frame an idea. And that idea being bullish yesterday was enough to give us an opportunity to take a 2R trade. So I just wanted to touch on that. This also was questioned. I know there was a couple of people asking whether you would take this trade, and it was in the general chat. I believe that would you still take this trade even though price tried to break through the breaker once, it failed, and then went again? Yes, you can still take this trade. Is it an A+ setup? Probably not. It's a lower probability setup, but it is still a setup nonetheless, because we do get our displacement through the breaker. So I just wanted to highlight that. I hope you guys got some info out of that you can take some notes on. Throw any questions in the chat if you would like, and I can answer those as we move towards the end of the stream. 4-hour dealing range, ITX 4-hour dealing range is so bearish. Agreed, yeah. And if you look, even on the hourly here, if we move out to the hourly, we pushed straight back up into, where are we? This huge FVG right here. And if we look at the midpoint or the mean threshold, the consequent encroachment, whatever you want to call it, price reacted right at that level. So these are the little signatures in price you want to keep an eye on, particularly when you're in the trade, to think about whether you want to try and reach for a higher take profit or not. This is a perfect example where you just want to take your 2R and walk away. Nonetheless, the bullish bias gave us an opportunity for a trade, and if you took it, well done. All right, let's roll on out and let's start having a look at the dailies. I've added 6E into my personal trading plan. So we're going to start looking at 6E. 6E is a futures contract for euros, if you didn't know that. We don't really need to look at euro because it's the same information. So currently price has swept an old high and has almost completely filled the remainder of this gap here. Does that make me bearish? Well, if we're in a bearish FEG, or we're in a or we've swept a swing high, then we look to be bearish or have a bearish bias. But have a look at how all these candles, the last 3 days, how they've closed. They are extremely bullish. There's virtually no wick to the high side on this candle, on yesterday's candle. So I'm not straight away bearish on euro. In fact, what I'd want to see is when we drop down to the hourly, before I move bearish, I'd want to see a change in the state of delivery. So I would look at being neutral on the daily bias for euro, waiting to see what price tells us. So here we are on the hourly. And you can see, you know, without really having to point anything out, how bullish the structure is. This is just a retracement at the moment. There's no bearish change in the state of delivery. For me to get a bearish change in the state of delivery, I'd like to see something like this being the level for a potential change in the state of delivery. But I'd also have to see price take out this high here. That's Tuesday's high, so that's an important level. And then move back through this level with displacement. That for me then would say, yes, we're definitely moving to a bearish structure. Otherwise, on the hourly, I would suggest to remain bullish, because you just follow the trend until the trend is no more. So that's 6E. Let's go over to oil. So we've already pointed out this FEG here. So that FEG, this bullish FEG, has now been mitigated. Therefore, I would be anticipating price to continue lower. This would be our external level. And we also have low resistance liquidity through here. So if we look at low resistance and high resistance liquidity, this would be high resistance liquidity. So it would be on our side of price. On the other side of price, we have our low resistance liquidity. Darnell, do you always look for the change of state of delivery on the 1 hour chart or the 5 minute? I only look for the change in the state of delivery on the hourly. I don't need a change in the state of delivery to take a position, because if you do wait for the change in the state of delivery to occur, you may miss the reversal unicorn if it presents, and then you'll be chasing continuation unicorns, and there's nothing wrong with that, but that's generally how it will play out. But I do, in particular for say 6E, the way it's currently positioned, I would like to see the change in the state of delivery to have the bias and the structure aligned. So bearish on oil today. I don't know if anyone else uses these little tags over here, but I like to do that. It's a quick reference point when I'm trading. I don't need to go back to the daily chart at all. I just look up here and I can see what my bias is. Let's drop down to the hourly. So I'll point out that low resistance liquidity down here. And you can see that price, as we've already noted earlier on in the stream, that price reacted to this hourly bearish FEG quite convincingly. And we've continued to respect bearish order flow the whole way down. We're also putting in high resistance liquidity as we move down. And today we also see that we have these equal lows. We know price loves equal lows. So that would be a good first target. And then this low here, followed by the low resistance liquidity that runs through this region here. Not saying we'll get through here today, but that's where I believe price is heading. Right, NQ. So here we see NQ has filled this bearish FEG, and when you have a volume imbalance, well, for me, I include that in the FEG. So price has filled that. We've also swept this external level here, and price has started to react. So with this momentum slowing down here and filling this gap, I would look to be bearish today on NQ. If we drop to the hourly, and I just want to bring up ES as well because they're correlated assets. And this goes to another reason why I'm also bearish. So at the highs here, we have a bearish SMT. NQ failed to create a higher high, whereas ES made higher high here. And then we also see a change in the state of delivery through this level, which price is currently testing. So it'll be interesting to see if this level fails or if it's able to hold. We've already reacted off it twice. We're currently reacting off it again. So we'll keep an eye on that. And it's virtually the same here for NQ. This level has been respected. And of course we have these relative equal lows. We also have similarly here with these lows. Can you still see the screen, guys? Or did it drop out? The screen is black. Okay, let me, all right, hopefully we're back. Okay, so at this stage, unless this change in the state of delivery fails, then I'll remain bearish on NQ, but I will remain flexible to see what happens here with price. Let's drop over to ES. So ES managed to completely fill this gap and obviously swept this high as well. Just a bit of trivia, if we had have had a bullish close yesterday, that would have been the longest bullish streak on ES since 2004. So I'm anticipating that we might see price reach back into this bullish FEG. Something like this. And then we might see that continuation higher. On the hourly, which we did already have a look at, but we'll have a quick look at it again. This was the SMT with NQ. So NQ made a lower high, while ES made this higher high. And we can use that level to project our standard deviations for some potential target areas. We've got a bullish FEG aligned here with a -2. We've got low resistance liquidity aligned here with our -2 to -4 max extension. As pointed out already, I'd like to see this level hold. Now changing the state of delivery. If this fails, then I'll be patient and see what price wants to do. But while we're under this level, I'd happily look for bearish entry opportunities. All right, let's have a look at gold. So gold is located at all-time highs. So there's no highs or anything we can work from to give us our bias. We can see that price had a strong move yesterday and then closed back down. So the sellers did come in later on. And currently today we're sitting in the range of yesterday's candle. For me, I would be looking at a neutral position on gold and then using the hourly to leverage from. So what that means, if I've got a neutral position, I could essentially take a position either way, depending on what the hourly structure gives us. prices continued to be bullish. This is the first sort of moment in time for over a week now where we're actually in some consolidation. But we don't have a change in the state of delivery yet. If we looked at this as a sweep through here, this would be the leg that took liquidity. Then you would look for this area here for the change in the state of delivery through here. If this continues lower. Otherwise, if we get a sweep higher, then it could be off this leg. So with the consolidation here, we could look to trade from either side of the range. So if price moves lower, we could look for an entry back into the midpoint of the range. Or if we get an opportunity from the highs here, we could look for an opportunity back into the range. So I'd just be patient on oil, on gold. Okay, let's move on to Dixie. Dixie's just been falling off a cliff. Price mitigated this bullish FEG, so we've closed through that. I'm anticipating prices to reach this low. We may see, and something I'll be keeping an eye on, maybe Dixie will reach up to the mean threshold here before moving back lower. Be interesting to see if price continues to react to this volume imbalance. So bearish on Dixie. Alright guys, I think we'll end the video there today. Thank you for tuning in, appreciate it. We will catch you next week for the midweek market meetup. Bye for now.